Good afternoon, friends. Welcome to the AAA Winner Series Webinar. I'm glad to share that we have our founder and managing director, Mr. Rajesh Kothari, who will now take it forward. On to you, Rajesh.
Thank you, Vatsal. Good afternoon, friends. As you all are aware, we do AAA Winner Series Webinar, whereby we invite promoters and CEOs and founders. They give insights about their sectors, about their company strategies, about their vision, and of course, how they see from their optics the execution of their vision plan. And today, I'm very pleased to share with you all that today we have someone who is very, very special guest, which is in the industry, which is probably of everyone's interest. If not from stock perspective, then surely whether to buy or lease home, whether to buy the office or whether to take on lease. How do we see the real estate market going forward? It is a hot market from last 3 years. And with that, let me introduce you Mr. Sahil Vachani, the CEO and Managing Director of Max Estates. Welcome, Sahil. Thank you very much for being part of today's AAA Winner Series webinar.
Thank you, Rajesh. It's a pleasure to be here. Thank you for inviting me.
Super. Friends, before I start, interaction with Sahil, let me quickly introduce you, just 2-3 lines about Sahil. I don't think he needs any introduction, but Sahil is a bachelor's degree in management science from University of Warwick, UK, that he completed in 2003. And then he was investment banker with Citibank. Post that, he was managing director with one of the Dixon Group company. And then in 2016 onwards, he became very, very active role in the various ventures of Max Group. And in last 3 to 4 years, under his leadership, Max Estates has achieved many milestones. He's one of the winner of the ET awards and also winner of many other accolades to his credit. With that, let me start the most interesting part of today's webinar, that is interaction, to know the sector, to know about the company, to know about the strategy, and last but not least, to check, probably I will ask the last question, maybe I will take it first, kya lagta hai, the real estate kya lagta hai. So let me ask, that is the first question, because I'm sure most investors probably would be looking forward. We keep getting Sahil, many investors, they keep asking us कि पैसा अभी इक्विटी में लगाना चाहिए कि रियल एस्टेट में लगाना चाहिए. So what is your view on the real estate sector in general before we go into the specifics?
So thank you once again, Rajesh, to invite me, and it's a real pleasure to be here and speak to you. On the real estate space, actually, we think it's one of the most interesting times in the real estate business. Over the last 10 years or so, the industry has gone through a very deep inflection point as a result of a few macroeconomic actions, whether it is demonetization, the incubation of RERA, the formation of insolvency bankruptcy code, and also the GST framework for the country. And therefore, this has created what we believe as an inflection point over the last decade or so in the Indian real estate space. And we believe that this is creating a corporatization of real estate from when it was over the last, since independence to now. So it's a very important, kind of inflection point and pivot in the real estate space, that the way we see it.
Sure. Super. Let me go a little bit, backwards, say 2003. You did your, master's from UK, and then you became a very, what I would say, glorified, impressive job as an investment banker. That too with Citibank, and then with Dixon, where you are basically probably interacting with the best of the leading global brands to make the company one of the most successful company in the consumer durable space. And then, real estate. So why real estate? What made you to select the real estate as a profession, as a career, and that too way back in 2015-16, where the sector was not the hot sector like today. So what made you to select real estate?
A great question. We saw a huge opportunity in real estate because of what I just said. There was a huge macro change and an inflection point coming because of government regulation, because of IBC, because of GST, because of RERA, most importantly. Second, particularly in our region, which is National Capital Region of India, we found that there was hardly anybody who was not impacted or whose life savings were not stuck in a real estate project. And that real estate project was stuck. This problem, I think, was more amplified in our region than it was in the south and west of the country. And we saw that not only is this regulatory change coming, but people's life savings and almost everybody knows somebody or themselves have been stuck or their money has been stuck. And also the products as a result of which and the experiences that these old, I call them builders, were making were not keeping the customer in mind. Then when you look at the customer, we saw that, hang on a second here, the customers are all traveling better. We all, as people, like to travel better. We are buying nicer cars. We are buying nicer clothes. We are uplifting our overall quality of life. Why is it that where we spend 80 to 90% of our time between a home and the office, why is it that those spaces are not being designed or developed or being delivered with a thought through approach? And then you look at the macroeconomics, whether it is the GDP, mortgage to GDP ratio, or you look at the affordability levels that India had at an income level or still has from a EMI perspective. You found that you will see that the metrics where India stands is actually really, really attractive. We are 1/6 or 1/7 what developed economies in the world are today. And so, both from a macro and demand perspective, we saw that there's huge opportunity. B, from a supply perspective, we saw that the existing players were, sorry to say, but almost going to prison or in prison. And finally, the products that were being delivered were substandard, whereas the quality of all the other consumption pattern was going up. The quality of homes and offices was not up to the mark. And there may have been one or two exceptions. They were doing it. But for a city of National Capital Region with 25 plus million people, there is definitely a belief that there should be more than 5, 7, 8 developers who are able to do that. So that's how we zoned in on the opportunity. And then we looked at the Max brand. The Max brand in the National Capital Region has been extremely strong. Trust levels have been very high because of the fact that we've been in very tough businesses like healthcare, life insurance, at that time health insurance as well. And therefore we said that the brand exists, the trust factor exists, the market opportunity exists, the supply side is crunching, there is a gap in the product. And can we as Max deliver profitably to the segment of clientele that we would like to in the two categories of offices and homes that we wanted to be participate in. And that's how we kind of zeroed in on the opportunity.
Wow. So I think basically, as you rightly said, there was always what I would say unmet demand kind of thing, unserved demand from the customer, which was getting served, but probably not in the right way. And that's how, you entered into real estate as a space. And if I look at your, vision of Max Estate, it states to be that aspires to be the most trusted real estate brand in the country. So I can correlate with, what you've been talking about, because most of the, Delhiites or NCRites or whatever you want to put it, they all have burnt actually their fingers. Their life savings were actually got stuck. And trust was the major issue. The trust deficit was the major issue. And I think this issue was not only in Delhi, but even in Mumbai or many other markets, metro as well as non-metro markets. And everybody was basically, having kind of a fear at the back of mind that if I book my home, will I get it back or not? So I clearly understand the vision statement from your perspective. But another important thing, what I've also observed, that how do you make sure that at the company level, at the policy level, at the institute level, how do you make sure that to be the most trusted, what are the 3, 4 right things you need to do it consistently, correct? If I look at, for example, at the country level, probably in real estate space, Godrej is definitely one brand, pan-India presence, and also enjoys the trust, not only from customers, but bankers or even the entire value chain, be it vendor, be it supplier, be it shareholder, be it banker, be it a borrower, be it a lender, across the value chain, or even for the private equity investors. So, in your experience, to be the most trustworthy brand in the real estate space, what are the three to four right things what you need to do it consistently?
No, absolutely. Great question. So, two or three things. Firstly, under promise and over deliver. I think real estate has been a space where there has been always over commitment and under delivery.
True.
And if we are able to under promise and over deliver, I think that's in a sense a big aspect. The second aspect, if I may say candidly, is that 10 years ago, trust was a factor with which you could win in the real estate space, that you're a trustworthy player. In our view, and over the last 10 years, it is no longer the winner factor. It is a very important hygiene factor. You have to be trustworthy.
True.
And therefore, the next level of what will enable an organization or a company to win, from our perspective, is the product and the experience that we are putting together. And for us, we've anchored ourselves on the philosophy of bringing real well-being to the real estate space. So, and it's interesting, we were in the healthcare business as a family, and we all talk internally to say we were in the illness business. We now want to move to the wellness business. And therefore, real estate and building real estate that enables true well-being is a part of our core philosophy. And that is, if you ask me, while trust is a basic hygiene factor, that is what is going to continue to differentiate brands like ourselves moving forward. So yes, we build trust by under promising and over delivering. B, I think delivering an experience and a product that is differentiated, that is thought through, that is got a deep attention to detail. And the third aspect is at a financial level to be able to be in a very controlled and conservative financial planning. And we have seen in real estate, a lot of my friends and gurus of the stock market like yourselves tell me that the single top three highest mortality industries in India is real estate.
Sure.
You look at last 20 years, who are the players, and today who are the players, the level of mortality players is very high. We only know property prices have gone up 20 years. So why is it that real estate players have not been able to survive? So I think the ability to focus purely on balance sheet, to be conservative, to grow in a controlled manner, to understand that the business is cyclical in nature, and therefore, and there is a lag of between when you plan and start and when you deliver. So therefore, keeping those three levels or pillars in mind, between under promising, over delivering, between product focus, experience focus, anchored on true well-being and live well and our work well philosophy, and a very robust and conservative balance sheet and a capital allocation process is actually what we believe is the core.
Absolutely. I think that's basically is like a, what I would say, mala, where every part has to be nicely threaded, a common thread, and that has to be fit nicely to make sure that ultimately your vision becomes your execution. Just extending more corporate perspective, if I look at the values at the Max Group level, the one important part of the values is seva bhav. And this the word I don't think I've read in any annual report of most Indian corporates, or probably none. There might be direct and indirect reference to that, but in your mission values, you have mentioned the values. The one is seva bhav. So when it comes to real estate, can you please tell us that, how do you practice seva bhav in real estate? Because of course, your products are at premium. So, and of course we are in the business, it is not a charity, right? So, but yet you put that seva bhav in your practice of dealing with your stakeholder, be it a customer or be it a supplier. What exactly how you practice this seva bhav?
I think this is a very deeply ingrained culture at the Max Group over the last 30 years or so. And the true value of Seva Bhav is reflective in the ability to be extremely humble, the ability to want to be of service to the customer, to put the customer at the center of everything, and realize that they are the reason why the business exists, to be quite candid. And finally, to be always with a mindset that we have to create a win-win-win value proposition. Right, today the world has started referring to some aspects of that through the ESG framework,
Sure.
that many have started talking about.
Sure.
But frankly, the Max Group was well ahead of this over the last 2 or 3 decades, and has always endeavored to make sure that all our stakeholders, investors, partners, suppliers, customers, employees, in the whole value chain have benefited, and therefore to try and create a win-win. And to be honest with you, it's difficult to articulate and explain that, but I think the first aspect of it is that the intention is to do that. And we believe that if the intention is right, in Hindi or in Urdu we use the word niyat, if
Sure.
that is correct, then actions will follow that to be able to enable that and to make that happen. So that's what we focus on, keeping our intentions right. And as long as we focus on that and focus on it through the value chain rather than only with one aspect of the value chain, we believe we can create a win-win.
Super. I think you are absolutely right. I think all are interlinked. More you are humble, particularly in real estate as a sector, where people have very bad experiences from the typical builders as a community, and no service standards by and large, even from the good organized players, at least in Mumbai market, where we have experience. That mindset of Seva Bhav in the entire organization, be it a sales or after post sales, more importantly post sales. The sales ke waqt to everybody is so sweet. I think real estate is the sweetest industry when it comes to sales. But the post sales becomes a major gap between promise and performance. So you are absolutely correct. Coming specific to the NCR market, because that's the market where you are focusing on. And when you look at this NCR market, as you rightly said, the word corporatization of the real estate sector. And we were doing some studies, and it seems that the total organized players market share was roughly 17% about 9 years back, which has now jumped to almost like 34%. I'm talking about across India. And I'm sure NCR also will be reflecting the similar trend. Now, in that process of doubling the organized players market share, from here on, because real estate is one segment where there is no entry barrier as such, correct? I mean, even a person who has a 1 acre can develop the 2 buildings, 5 buildings, 10 buildings, correct? There are no obstacles as such. And as you rightly said, the word, the trust is basically a hygiene factor. Even the new developers, standalone developers have also understood this. So what basically sets you apart to become the larger player within the NCR market? Because the market of opportunity is, of course, huge. And currently, Max Estate is a very small company, all right? So you have a two-way, I would say, competition. One is from the large players like DLF, Godrej. Whenever they do big, they really do in a very big way. They are national brands, pan-India presence, Godrej kind of player in particular. Best of the brand, best of the execution, best of the quality, best of the design, best of the customer service standards. If I talk about DLF, again, within Delhi, the best brand considered within Delhi. And on the other side, you have a small players who are very boutique players, niche players. They are not overburdened with number of projects. They have enough bandwidth to complete one by one project and deliver on time. So in that two competing forces, if I put Max Estate in their entire space, how you basically differentiate yourself, and how do you make sure that you have a right to win?
Absolutely. So I think the first part is we see the trend of corporatization or the corporate developers increasing market share to continue. The reason why we say that is if you look at today, real estate, scalable real estate has become a very organized and a capital intensive game. Previously, developers used to collect some money from one project and start another project. Now with RERA, you cannot do that. 70% of the money is locked in till the time you complete. And therefore, by that definition, scalability for every person is not easy. You have to have the deeper pockets or the bandwidth to be able to do that. Second, if you look at the market, firstly, in Delhi NCR only, and if you cut back to 21, 22 years ago, in the early 2001, 2002, 2003 era, you had 20 or 25 developers who were doing very robust sales, 3,000-4,000 crores, something like that in the region, each developer every year. Cut to 2023-24, we know that over the last 20 years, our country and economy has grown multifold. But the number of developers that exist in the national capital region have actually shrunk. So even if the market was exactly the same and there was no growth, there was still a significant amount of headroom for an organized, trustworthy brand like Max Estates to come and take some amount of sales that are there because of the space that existed, because of the churn of the old developers.
Sure.
Said that the market has grown. So we believe, then you compare this to anywhere, any good global city in the world, which has a population of about 25 million people, which is broadly the population of Delhi, NCR, and greater, that area, greater NCR area, if you call it. There are at least 10, 11 developers who are doing very good, healthy sales in those markets, anywhere in the world. So why should it not be the case in the national capital region, particularly when that was the case 10, 15, 18 years ago?
Nice.
Number two, so that's one, the market dynamic. The second aspect is, do we have the capability as Max Estates to scale up and cater to this demand? That we have demonstrated, and we are continuing to do that. The third is the differentiation and why we have the right to win. Is if you look at the various pillars we have in our journey now, if you look at one pillar as capital, we have raised about 2,500 plus crores of just equity in this company over the last 4 or 5 years, and deployed equity into our projects to be able to do that. In addition to that, we have on board a capital partner or an equity partner as New York Life Insurance, who we are their exclusive partners for India, and they have currently $600 billion of AUM, 5% of which is allocated to real estate. We are the exclusive partners in India. They were our erstwhile partners in the life insurance business. So one pillar of capital, we are very robust, strong on, and with the right partnership. The second is people. And we have, over the last 5-6 years of being in this business, built a very strong team of 200 plus people with deep experience in real estate. For example, the team that enabled us to build the 15-16 hospitals in Max, Antara Senior Care in Dehradun, and other projects, we collapsed them all under Max Estates in about 2016-17. So we were able to build a strong, and on top of that, we built another 200 plus people that are there. So we've got a very strong people focus and institutionalizing focus, which traditionally the Max Group has also excelled at and done very well. The third pillar is process, where we have put in place a huge focus on technology, process, enablement to be able to scale. Then we come to brand. We spoke about that. The Max Estates brand is extremely strong and continues to be able to demand the respect and the credibility. Another pillar is track record. Over the last 5 or 6 years in a limited journey, we have already delivered both on office developments and on residential developments, not only been able to sell, but been able to deliver the full life cycle from acquisition to building, to completing on time, to building below cost and budget, to leasing it out, to commanding the premium from the customers, or 25 to 30% of the market we get to the market price, we get a premium, and validated through a phenomenal customer experience of them living and adopting the live well and work well philosophy in action in operating assets. So we have the track record to do that. And finally is the pipeline of growth. So we have in the last 2 years itself built a pipeline of almost 8 million square feet across our office and residential developments that have enabled us to be able to get to the platform that we are, that enables us to give us the right to win. So when we say that we believe that Max Estates can become in the top few preferred real estate offerings in the National Capital Region, it is standing on all of these pillars.
Sure. So, I think you briefly touched upon it, and let me zoom in into, one segment within it, So you selected two parts, commercial parts and residential parts, within the real estate. Why not only one segment, say residential segment, where you get the cash flows and, that gives you more visibility, because commercial is generally a little bit more, longer tenure. Anywhere it takes from 0 to 5th year, from conception to putting it on full rental with a full occupancy typically takes 4 to 5, 5th year. So why not only one segment? Why to have two segments?
Great question. You see, we believe that the business model of both segments are very different, at least for us. We are in the commercial segment in what we call the build to rent or the annuity income portfolio. And on the residential is the build to sell. The market, as we know, is very cyclical. Today, the market is very buoyant, is very strong. So it feels that one should only be doing residential and not commercial. However, if one takes a longer term view, we believe that having a commercial portfolio and an annuity income on the balance sheet is an extremely good diversified revenue stream and asset pool for us to be able to have. Also, it's very value accretive. Again, on the office side, the business dynamics are quite interesting. The supply side is crunched in terms of the build to lease developers who are building it. There are hardly 2 or 3. And demand continues to grow. What one thought in COVID that nobody is going to come to the office and people are going to work from home always is not the case. Even tech companies are calling people back to office. In fact, they are now wanting office spaces and to be of a different kind, which enable collaboration, innovation, and therefore higher quality offices. So we believe that, again, Max Estates is very nicely positioned and we've delivered a track record to do that. So the reason why we are in 2 is because A, we believe it's a very good mix in our revenue portfolio to have built to what we sell and what we create an annuity portfolio. We believe that the annuity portfolio can be hugely valuable for us in times to come. It's a longer term game. One doesn't see the immediate capital values reflecting here and now as one does in the residential business, but in the commercial office space business over a long-term period we will. And again, driven by an industry trend whereby the setup of the REITs, the setup now of the micro REITs or the smaller REITs, the liquidity that build to yield assets have in the country, both from institutions and as a result of the REITs prospect is actually increasing, and the supply side is crunching. So it's a very good diversification in our overall balance sheet that we are looking to do.
I see. So coming to your commercial side first, correct me if I'm wrong. Till last year, I think you had roughly about close to 1.1. I'm talking as on December 23, 1.1 million square feet. Am I right? Max Tower and Max House and Max Square. These 3, if I put it combined, then that's basically what the number is. But let's move to say 5 years down the line. Say 2030 kind of thing. I think you openly mentioned in one of your presentation as well as in investors call that you plan to add 1 million square feet. Correct me if I'm wrong, every year on the commercial side of it. So, if I do that, say over 5 years, you add 5 million square feet. So from 1 million, you go basically, 6 million. But considering that you have a solid partners like, New York, like capital is not a constraint. You have demonstrated your capability, by getting probably the best of the awards within the commercial space. And customers are also equally happy and satisfied with kind of work what you have delivered. Why not we look for much bigger portfolio? Capital is not a constraint. Execution is not a constraint. You are anyway very, very focused within, NCR market. You are not right now expanding into other regions. What stops you to become a 10, 20 million square feet in commercial side? I'm talking about over next 5 to 7 years. I'm not talking about next quarter. I'm just talking about next 5 to 7 years. Why not have a much bigger portfolio?
So our focus and strategy has been to focus on the national capital region. We are very conscious that we are a young company. We don't have a legacy of many years. We are still 6-7 year old company, and therefore it's very important for us at this stage of our journey to be geographically focused so that we can ensure and enable successful execution. I think, as we have discussed earlier also in the call, what is the difference between anything that we are doing, what we are talking about, and what has happened in real estate in the last many years is effectively execution, right? Or lack thereof. There has not been good enough execution. So we need to ensure that we are able to execute on the top of our game. We are able to under promise and over deliver, and we are able to grow in a sustainable manner rather than, if I can say, trying to bite off more than we can chew. So that's the first reason why we are growing in a calibrated way in the commercial space. A. B, because we are wanting to be in the national capital region, there is also a certain headroom of demand that we have assumed for max estates to take in the overall market share. And therefore, within that, we came to 1 million square feet as a reasonable market share that we can take at this stage, managing the market share and the market demand dynamic together with our own ability to scale, to learn, and to execute extremely well. The point is, when you combine this along with what we are looking to do on the residential business, effectively we are going from a portfolio of 1.5 million to almost a portfolio of 4 to 5 million a year when you combine both of these together. So it is not that we are not making a sizable jump. We are already making a sizable jump combining both the residential and the commercial business. Also, we are very cognizant of the fact that there are tailwinds in the residential space. We have got a huge response and done well. So we want to capitalize on the residential aspect further. So we are going a little bit more aggressive on the residential side while we are continuing to scale the commercial side.
I'll come to residential. Just one extended question from my side. Particularly if you look at the, any real estate developer, if I look at South-based players like Prestige or Shobha, or if I look at Northwest or even Pune-based player or Mumbai-based player, typically they keep entering into their adjacent market one by one. And that's how over a period of time, they de-risk a particular geography, right, or particular micro market. Like for example, you have also moved from Noida to NCR, and then over a period of time you keep growing. So my point is kind of investment what UP Uttar Pradesh has seen, in last probably 12 to 24 months, and the kind of the growth opportunity what UP kind of a state can offer, because there is a very I would say absence of any large players, so to speak, correct? But the kind of FDI which is coming into UP state, or large corporates who are investing into the UP market, particularly the industrial zone I'm talking about, do you think, that kind of a market, it makes sense for you for both commercial and residential, or you think that it becomes more like affordable housing kind of a space, and therefore, you prefer not to enter that zone? Any thoughts on this?
No, we believe, firstly, to your first question, we also believe that we are diversified because we are in 3 micro markets. We are in Noida, we are in Delhi, and we're in Gurgaon. True. So effectively, there are 3 different states.
Absolutely.
And we are in all 3 micro markets. So there are, very different dynamics, very different ecosystems in that sense. So that's one. To your point on the future growth potential of Noida and is completely taken. I think the infrastructure is fantastic. There was an issue about crime some years ago, but over the last few years, we have seen that crime, safety, and a lot of the social, let me put it like this, the physical infrastructure that exists in Noida is fantastic. It's world class.
Yes, absolutely.
There was always a problem around the social infrastructure, which the noise around that has come down quite substantially over the last few years. And we are continuing to see the social infrastructure continue to get better more and more in Noida. So we are very bullish on Noida. We believe that both for residential and commercial, it's going to be a big growth vector, not only for the national capital region, but also for the country. Because if one reads what India is to become in terms of the 5 trillion economy, UP has to play a significant part in that. And if UP has to do that, Noida is a very important epicenter over there. So from that perspective, Noida is a huge growth prospect. And from a perspective of us de-risking our business, we are across Noida and Gurgaon. Gurgaon is where a huge hub of the social infra is, and one cannot ignore that market both from a residential and commercial perspective. And therefore, we are in that market we are in both markets in both categories. And that's where we want to play. To answer your third question about adjacencies, you see, we believe that from where we are such a small scale today at Max Estates, that for us to grow to a 10x size from here, we can definitely, we have the headroom to do that in our existing markets. And we believe that we can do that, and we have to focus on executing it really, really well, because that will have a flywheel effect on the brand, on the future growth of what we want to do. So we are very focused on solid execution in these micro markets, where these micro markets are offering us tremendous headroom to grow. So we are very confident that we will be able to grow in these micro markets. And as and when feel that we are saturating in these micro markets, we can always look at adjacencies. But today we see enough headroom available.
So since you talked about the headroom and the residential, particularly the Gurgaon and Noida, both are very important markets for you. So in terms of the pipeline, because typically in real estate, anyway, the sales gets booked only once OC is issued. So sales figures at times are very, very futuristic, whereas the pre-sales numbers are what matters. And for pre-sales number, what is most important is the land bank, kind of already have under your belt. From land bank to launch, and from launch to pre-sales, and from pre-sales to actual sales, and then actual profit. That's how basically we as investors look into it. So when I come to that, the pipeline, the funnel, that basically gives visibility from the investor's perspective. The likely launch is over the next 2, 3, 4 years. And that basically ultimately will result into a sales. How do you see this pipeline? Why I'm asking this question is because on one hand, the real estate market is becoming hot, and therefore the acquisition of land parcels are becoming extremely difficult because the cost probably is asking rate is very high. And probably at that level, it is extremely difficult to make IRRs. The return on capital employed becomes very, very difficult. So, how do you see currently the land acquisition opportunity, number one? Number two, if we are not going to do that because asking rate is too high, whether there are enough joint development opportunities, and if yes, how the economics works, because I'm sure the developer is equally greedy, and he also doesn't want to lose the upside. So how these opportunities are, because on one hand, there are players like DLF and Godrej who have a traditional land banks, which has enough visibility for them 10 years, 20 years, maybe, And on the other hand, there are players like, Max Estate who has to constantly work for the growth, either acquire the land or enter into JDA. So how do you see this opportunity and or the challenges for this kind of a thing, which gives you visibility for the pipeline?
Yeah. So if you look at our journey, right, we decided to get into the residential space end of 2021. We already in the last 2 years, 1.5 years, have built a pipeline of close to 3.5 million square feet in the residential space. 1 million square feet we launched last year, which is the last FY that got completed, and we sold that. So we recorded sales of about 1,800 crores. We have already given guidance, which is in the public domain, in our previous release also, that we anticipate to do about 3,600 crores of sale this coming financial year. So we are almost on a trajectory to 2x, double that. So that's what we've been able to do already in a short period of time. Second part of your question is in terms of future growth potential. Absolutely. I think what you mentioned is the key driver of the business in terms of the continuous pipeline. Not only to secure that, but also to do that in a way that keeps the balance sheet strong. Otherwise, then we are contradicting what I had said earlier about a very strong pillar about keeping the balance sheet strong. And therefore, one very interesting way in a market like where we are today is joint development agreement. Now, when we look at joint development agreements, there are 2 or 3 reasons why we believe that Max Estates is in a right pole position to win and to be able to secure more joint development agreement understandings and agreements in that framework. A, the brand, the trust, the credibility that Max as a brand enjoys is very evident in the local micro market. B, we are a local player. So therefore, accessibility to landowners and therefore a lot of connect with them is extremely important because we are available locally. Third, what we bring to the table is a multiple a community building framework. What I mean by that is, as part of the Max Group, and I'll give you this as an illustration in a new project in Gurgaon that we are looking to launch soon. We actually have in that 12 acres, a section of it which is Max Estates, which will be Max Estates branded, and a section of it which will be Antara Senior Living branded. Now, the balance sheet is all ours, but we've partnered with the other listed company of the Max Group, Max India, which has Antara Senior Living as a business, which is focused on senior care, and therefore to do a senior living commute part within that development. What does this mean? This means that in one development, we have both Max Estates residents and also Antara Senior Living residents. Our language, we call it intergenerational. No other developer in the country is able to provide this intergenerational framework the way we are able to provide it. What this means is for two aspects. One is that we are able to build a more successful community because there are very few people who are investors who come into Antara. It's mostly end users who buy Antara. So therefore, like in Hindi, they say the community bas jati hai. And therefore, it's more successful in that sense. So that's one. The second is we have obviously dual network of distribution or sales. There's a Max Estates network and the Antara network. So if you're a landowner, when you look to partner with somebody from a joint development agreement perspective, what are the aspects that you want? Number one is that you need somebody who's trustworthy and who's credible and also who's accessible. I think Max ticks that box. The second is, what is the premium that or the highest price you can command? And Max Estates has shown repeatedly in all our developments that we get the highest premium in the local micro market. So that's the second. And the third element that's important for a landowner is what is the velocity? How quickly can you sell? And therefore, having the dual distribution network enables us to do that. So if you're a landowner who owns land in the NCR region, what are the options that you have? Either to build something and launch on yourself, which increasingly, because of the move towards more trusted developers, branded players, it's going to become more and more challenging. Or you partner with somebody or you sell outright. To sell outright, because there's going to be a huge value mismatch, there'll be very, very few buyers who are going to be there. And therefore, within the pool of joint development agreement, we believe that because of the 3 reasons of trust, credibility, access, because of the price premium that we are able to get, and because of the velocity of the dual network that we have between Antara and Max Estates, we end up being the most preferred player. That is how we already secured our Gurgaon opportunity, which is 2.5 million square feet. And therefore, we believe that we will continue to grow and look to grow our pipeline. And you're absolutely right on the importance of it and the challenge of it. And therefore, this will be a key metric for us moving forward that we would like to monitor and share with our investors as to how we are tracking on this metric in times to come.
Yeah, I mean, like Estate 128, I think, if I'm not wrong, within 48 hours, the project was completely sold off. And I think it is unheard of that in a Noida, you get 1,800 crores kind of a pre-sales in a record time of 48 hours. It speaks a lot about your volumes. And of course, along with it, it brings the added responsibility, in terms of the final execution, because everyone is keenly monitoring that project. So are there enough opportunities in JDA? You think there are enough such land parcels, whether you get it or not, separate point, but in terms of the availability of such opportunity, do you think there are enough? That's number one. And do you think, considering that, all these developers, the landowners, they've also seen last 20 years, 30-year cycles. And since currently the market is little bit hot market, Do you think it is easy for them to take decision to do it today, such kind of a JDA, rather than keep waiting? Because earlier it used to be like that, I don't want to do it today. I will do it after 5 years. I'll get more value, and then after 5 years, and then all of a sudden for 10 years they saw that there is a zero value because it was not monitorable. Correct? The monetization was difficult. So you think there is a kind of a sense of what I would say, let's do it kind of an attitude from the landowners, and are there enough such opportunities for you to identify?
Let me put that in context. Actually, to achieve our stated objective of between 2 to 3 million square feet of launches and sale every year in the residential space, actually we need to, on average, close between 1.5 to 2 opportunities a year. That's it. I just want to put that in perspective.
Okay.
We don't need to sign 10 deals a year to get to this number. We need to sign maybe 1 or 2 deals in a year, an average 1.5 deal a year, to be able to hit that number. So the question that we are asking is, can we, amongst as Max Estates, in the whole year, close out 1 or 2 opportunities? We believe definitely we can. Is it an easy is it an easy thing to do? I don't think so. But I think it's not that we have to solve for 10 opportunities. Do you know what I mean? That, so there's a challenge. We just need to solve for 1 or 2. So we are very confident that we will be able to do that. While it's not the easiest thing to do, and in today's market where sales are strong, it feels that this is the biggest operating metric that one has to achieve. But having said that, we are very confident because of the reasons I mentioned, that A, we think we are the right partner, we're the credible partner, we do right. B, we can get the highest price, and C, we have the framework for the highest velocity. And therefore, is what we are offering to the landowner a win-win for him, or is in the best situation for him? Answer is yes. Now, in land, there are a lot of complications with land and the title and encumbrances and family issues, and there, like this, there are a lot of land. So the way to look at it as an operating metric is to close 1 deal. We probably look at 50 or 60, and hopefully we can close 1 or 2. So as we keep increasing the pipeline of our evaluation, we're very confident that we will be able to get to being able to close this deal to be able to do the number that we have to do.
And within, say, next 12 to 18 to 24 months, kind of the consumer behavior, what you are looking at right now, would it be safe to assume that you'll be looking a little bit more premium rather than more, what I would say, mid market? Or do you think premium is basically where you prefer to position and identify project from the location perspective as well as from the affordability perspective?
So, sir, on a lighter note, जो आप बॉम्बे में अफोर्डेबल कहते हैं, that is premium here. So
I know.
We should just clarify the delta. But I think our own definition is that a price point of between 17,000-18,000 rupees a square foot till about 25,000 rupees a square foot is what we call the luxury segment.
You mean Noida or Gurgaon?
Noida will be around 15 to 15 plus, and Gurgaon says 16, 17, 18 plus. So in that segment, up till 23, 25,000 is what we refer to as a luxury segment, because the definition changes for everybody.
Sure.
What that means is, if you take an average price of say 17, 18,000 rupees and you take a 2,000 square feet apartment, it's about 3.5 crore ticket size.
Sure.
For the smallest, but going average ticket size maybe 4.5, 5 crores.
Sure.
This is the segment that we want to play in as Max Estates. So let's call it a home for 5 crores. Average price is the ticket segment that we like to believe that is going to be the sweet spot for us. That's going to be a focus area. And the way we do that is, if you look at a constructioning plan, it's usually over 3 to 4 years. So for a person to come in, he needs to pay in about 1.5 crore, 1 crore 75 lakhs, he can come in to do. So we believe this is the slot that we want to play in. That's the price segmentation. From a product segmentation, is very, very premium. We don't think this is affordable. While in some markets this is affordable, but we don't think this is affordable. So we offer top of the range, full specs, the best that we can do, the best ecosystem, the best amenities, a lot of hospitality, a lot of services that are baked into this sort of a value proposition that we want to offer to the customers. So that's the positioning where we are.
And just from these both pockets, the Noida and Gurgaon perspective, this 5 crore kind of a price point, or let's assume that 1 year back, maybe 3.5 to 4 crore kind of a price point. Typically, what is the demand and supply here? What is the size of opportunity where you think the market can absorb in terms of the number of units or square feet, or I don't know, some broad benchmark?
So let's look at the facts and the numbers. If you look at 2023, in Noida and Gurgaon, there is average about 60 million square feet of residential space that was sold at an average price of 12,000 rupees a square foot. If you, because it's an abnormally high year, if you take the data over the last 10 years and you average that out, including the dip that we saw in COVID, Noida and Gurgaon is average of 28.5 to 29 million square feet a year. What are we saying? We are saying that we would like to do about 2.5 to 3 million square feet a year. So if the market sustains at the 2023 level, we are talking about a 5% market share in this segment. Just this is Noida and Gurgaon. This does not include Faridabad or Greater Noida or periphery. Only Noida and Gurgaon. Does not also include Delhi.
Sure.
If we talk about if the market sustains at 2023 level, we are saying that can Max Estates take a 5% market share?
Okay.
I don't think it's going to come at the cost of any other developer because there is, like I told you, the number of developers has shrunk. So there is enough headroom to do it.
Sure.
We assume that the market is going to fall to the 10-year average.
Sure.
Even then, we're talking about an 8.5, 9% market share for us in single digit.
Understood.
The data points out that if you look at historically, this is what the sale that has happened in both Noida and Gurgaon. And if one were to look at the data, we feel very confident that the aspiration that we have for ourselves at Max Estates is extremely doable.
That is in volume terms. And in terms of when you look at the price point of, say, for example, last year, say 4 crore price point. At that price point, what do you think would be the annual sales of these two markets?
See, so this price point is at, like I told you, last year is around 12,000 rupees a square foot. Now we are slightly more premium to that, which is about 17,000 rupees a square foot average. So that is also evolving, and that's very difficult to look at historically because income levels have moved, affordability levels have moved, so on and so forth. So definitely we believe that with the economy growing where it is, with the affordability levels where it is, and for that a very important metric is the mortgage to GDP at a country level, and also the EMI to the pricing, for level that is there. And if one looks at both of those metrics, we are not at we are at the median or mean in those two metrics as well. Historically, and with other countries, we are much lower. Like I told you, we are 1/6 or 1/7 of developing markets as we compare that data. So there is a tremendous headroom available for we believe the economy to if it continues to grow for this to do well.
Sure. And just last 1 or 2 questions in terms of the adoption of technology. If you look at the prop tech kind of a thing, so are you also, because they offer a lot of 3D and the online view of the project, so whether you also kind of registered on prop tech kind of a platform, and how you use AI and such kind of things for both customers experience perspective and also in-house in terms of the improving the efficiencies, the cost efficiencies. How do you use this?
Yeah, we are deeply committed to adopting technology and prop tech across the value chain. We have spent a lot of time, effort, and energy in adopting it, not just like things like SAP that we have across our backbone, but across customer interface, across our channel partner interface, across our operations of the buildings, energy efficiency, air quality management in the National Capital Region. Air quality is a big challenge. We're using technology to help address a lot of that for us, across design, across being able to crunch the timelines. At the end of the day, as you correctly mentioned, that one of the key metrics for us is how quickly are we able to build, and therefore the cash flow continues to be is very linked to that for our future residential projects. So how quickly we're able to move from acquisition to launch to sales to construction to collection, and so on and so forth. So technology is a deep enabler. I will say that the entire industry, including us, we are at a very, very nascent stage. I don't think our adoption levels are anything for us to write home about, but definitely there's a lot to do. Definitely this is a huge area, and I think the way we look at it, this will further help strengthen, institutionalize, and solidify the backbone of the company, right? That enables us to execute at scale.
So can you give, say, one or two examples where, by using of technology or the new methods of construction, which has evolved also over a period of time. 10 years back, the number of months it used to take to do one slab, and today the life has completely changed. And when I look at the global markets or even the Middle East markets, they are far more efficient compared to Indian market even today. So, what it takes to improve the efficiency to that level to, reduce that cycle time, from typical 4 and 5 years to, if we can make it in 2.5, 3 years, what it takes. Yeah. Because it is already, the cycle is reduced, but why can't we short it further?
I think, great question. The fundamental issue is mindset, right? I think we have people who've done this a certain way for many years. And therefore, to break through that mindset and say, no, let's try this technology. There's a better way to do it. So just to give you examples. So whether if you look at design stage, can we use a much more elaborate BIM system to be able to cut out all the conflicts at a design stage and get to execution quicker. When we look at precast shuttering, we have My One technology. Can we adopt that more freely, which is happening now? Can we look at tools for project management, for quality management? Can we have those cameras across all the labors that they can go? There are apps to record it, and therefore monitoring of multiple sites to be done online. Can we look at energy efficiency systems across, let's say, tools that we have that can optimize our cost of energy? Can we look at filters that enable a better customer experience? Can we look at apps that enable more frequent customer interaction? So across the value chain, including construction. Construction is a very important aspect of it. But construction also includes design, because that is linked to construction. It also includes quality. It also includes finishing. It also includes a lot of other things that are all intervened as part of that. So definitely we see that there's a huge opportunity that we have to adopt technology and take it forward.
So have you set just last 3 minutes from my side, have you set any benchmark in terms of, that over next 3 to 4 years, we would like to do, say, ABC in terms of the cost efficiency, delivery time? Are there any set benchmarks within the organization which can help you significantly to improve your efficiency, and in turn that can result into more velocity? Right?
Absolutely. We have very, very deep ingrained targets. We have a full digital roadmap about how this company is going to do, what we're going to adopt, how we're going to reduce the slab to slab cycle time, how we're going to get finishing done quicker, how can we go from design to execution quicker. So yeah, we have and even cost, in terms of scale, what our cost was at 1.5 million square feet, as you correctly pointed out, to doing 4-5 million a year. Just giving a number, even if you say 400-500 rupees a square foot, you're adding 250 crores straight to the bottom line. Absolutely. Just on 500 rupees of cost saving a year, just because of the scale that we have. That's where, for me, my manufacturing background comes in and says, sure, that this is how it was done in the manufacturing world. So we now have to move, while we have to retain our edge with respect to customer experience that we have excelled at, and we have done really well at the with Max Estates, but also to spread that to now time and cost efficiencies.
Super. That's absolutely great. Sahil, I think you have all the ingredients. The tailwinds are in your favor. And of course, in investment, we say revenue is sanity, P&L is vanity, and cash flow is reality. I think it's the place more to real estate companies because, as you rightly said, at the end of every 10th year, we have seen significant change in the top 5 players. But I'm sure with the Max Group's, huge credibility in the industry, and under your leadership, I think you have many more new next milestones to achieve. We wish you all the best. And we are really thankful to you once again for giving your valuable time. It has been really insightful discussion. In fact, I had a few more questions, but because we had a 1 hour strict limits and I don't want to take more of your time, probably we'll do it sometime again. Looking forward, for your next time interaction as well. Thanks once again for your valuable time.
Rajesh, really appreciate it. Grateful. Thank you, sir. Thank you.
Great. Thank you. Thank you, friends. Thank you very much for joining us this AAA Winner Series webinar. We'll put this YouTube link shortly. Thank you.